Welcome back. In Kenya, the central bank governor Patrick Njoroge says Kenya's inflation rate will remain above the government's target range in the next 6 months and then ease back towards it. Kenya's year-on-year inflation surged to 9% last month after a drought drove up food prices. The target range is 2.5 to 7.5%. And on the commodities market, the recent FX policy thrust of the Central Bank of Nigeria has seen the Naira gain 34% in value since the new year started. Naira is at 380 at the parallel market, PTA at 360, diesel at 250 Naira per litre, and of course FAC at 514 billion Naira. This slew of positive indicators, no doubt, have some brightened, some brightening effect on many Nigerians. However, analysts at the financial derivatives say it's not yet time to say uhuru. According to FDC analysts, before Nigerians get carried away and become victims of a crisis or false expectations, it is important they take a deep breath and remember that this is all due to high oil price and production. Let's look at the new oil market realities with a research analyst at financial derivatives company, Desola Simoni. Good afternoon, Desola. Thank you very much for joining us.
Good afternoon, Chimeze. Thank you.
Now, oil prices are beeping around $50 early today, and we have seen some Naira appreciation, FX reserves rising, and yet your report says it's not yet time to rejoice. Why?
Thank you for that question. I think that before we champion glasses, rejoice, we should understand, first of all, why is all of this happening. Two major reasons are responsible for this. One is higher oil prices and higher production. The second is the new FX policy of the Central Bank of Nigeria. Now, in economics, when an external shock happens in an economic model, there's something called impulse response function, which is a state where the economic variable is volatile. Now we've seen the Naira really volatile. In the past 4 weeks, the Naira has appreciated by 36% and is still appreciating on a daily basis. So I think that, and again, we are also looking to see the consistency of the Central Bank of Nigeria, but so far since the announcement of the policy, CBN has been consistently injecting dollars into the market. So we are still looking at where the Naira would stabilize at, and we are looking at where the Naira will stabilize at before we now begin to rejoice. And again, we are still vulnerable to a shock in either oil price or oil production. So I think we should be cautiously optimistic about this situation, but we are happy all the same.
Talking about vulnerability, oil prices rose, of course, on the possibility of an extension of an output cutback by June. Do you see this extension happening? And if it does, what will this mean for Nigeria?
First of all, if the extension, the extension is visible, it is possible. However, the news from OPEC is saying that they would only extend if the global inventories are higher than the 5-year average, and as at now, they are still higher than the global inventories as at today is higher than the 5-year average. But again, this is just halfway through the production cut. I think it is too early. I think it's too early to decide whether or not there will be an extension. It is possible there would be, and if there is an extension, we are likely to see oil prices inch higher, and this is always good news for Nigeria, provided that our production can be higher as well.
Now, there's another twist to it. Your organization see Nigeria being included into the next output curve deal. Do you see Nigeria's current production at sustainable level to warrant a cut?
Well, I think that it is possible. It is possible that we could be included in the production cuts if they extend it. But personally, I do not think so, because of our installed capacity is 2.2 million barrels, or according to OPEC, 2 million barrels, and we're still at 1.6. So I think that there's still room for improvements, and I don't think that would be included in. If there's an extension, I do not think that we will be included, personally.
And if that happens, that certainly is not good news for Nigeria, or is it?
If the can you come again, please? I did not get that.
All right, so, well, I said if that happens, that is certainly not good news for Nigeria, or is it?
If they include Nigeria in the production cutoff, it's not good news because we could achieve more. We could ramp up our production to about 2 million barrels per day. So if they cap our production at maybe 1.5 or 1.6, of course we'll be losing some form of revenue if that happens. But I do not think they would include Nigeria if there's an extension. And if there's an extension, ceteris paribus, oil prices will rise, will increase. But shale again, the US shale producers may also ramp up production. So oil price will probably rise, but at a slow rate. But it's always good news for Nigeria, provided that our production too would increase.
Now, how can Nigeria capitalize on the recent trend in global oil market to ensure that the positive indicators of the Nigerian economy that we're seeing is sustained, particularly as the country is moving towards coming out of recession?
Yeah, the government has already started making moves or policies that will encourage IOCs to invest in Nigeria, to basically boost our production. I think that what Nigeria can do to take advantage of the higher oil price would also increase our foreign exchange earnings, because as of now we still have a fragmented foreign exchange market with different prices for different groups of people.
All right, thank you very much for your time, Desola. Desola Simoni, research analyst with Financial Derivatives Company here in Lagos. Angola's state-run Sonangol has taken 2 cargoes out of its planned May exports in a move to boost its compliance with an OPEC deal to curb production. A revised loading program showed the country's exports were now set at 1.61 million barrels per day from 52 cargoes, down from 1.67 million barrels per day from 54 cargoes initially. The 2 cargo loadings removed and pushed into June were an end-month Delia that was with Sonangol and a Cabinda that was set to load with ENI. Under the deal with the Organization of the Petroleum Exporting Countries and Other Nations, Angola agreed to cut 78,000 barrels per day from a reference production level of 1.751 million barrels per day. And finally, Nigeria's Oranto Petroleum International Limited plans to bet $500 million that Africa's newest nation can end a 3-year civil war and create the conditions to revive its oil industry. Oranto, with assets in Equatorial Guinea and Nigeria, plans to invest $500 million to develop the oil block awarded by South Sudan earlier this month. South Sudan is bidding to double crude production that plunged by at least a third to about 130,000 barrels a day since conflict erupted in December 2013. That decline, combined with a drop in prices, saw the economy contract by about 13% last year. And that's it on the program. Thank you very much for watching. I'm Chimiji Ezinwago.